Comes to Maruti, because Maruti's numbers have been very well received by the market. The company has posted a strong performance in the first quarter, beating street estimates. Maruti points to a pickup in rural demand as well as a shift to SUVs from smaller cars. Our colleague Vivek caught up with Rahul Bharti, Executive Director Maruti Suzuki, to discuss the company's first quarter performance and began off by asking him about the moderation in the demand environment. Listen in.
The demand has been slightly muted this year right from the beginning, and that was fairly known, and we had announced it also. The industry body, SIAM, had given out a forecast of a low single-digit growth for the year. But that's perfectly all right. I mean, it's not a cause for worry because India is at a high level of about 4.2 million cars, the domestic market size last year. And with such high levels, once a while, the market does take a breather. And India has a long-term potential, so a few quarters here and there don't matter much.
Okay, so going forward, even though there could be a little bit of demand moderation, you continue to remain quite positive. Now, next up, give us a sense of the breakup. Number one, in terms of the various segments that you're present in, how is it that the SUV segment is doing? We understand it's potentially giving a much higher contribution to the revenue mix. And number two, yesterday in the conference call, you've also indicated that the rural segment demand has been higher than urban. So give us a sense of the demand trend.
Okay. So, see, it is true that for a long time, for us, the rural has been performing better than urban. And I hear recently that two-wheelers and FMCG sector has recently picked up for rural. But for us, rural has been doing good for quite some time. In terms of the domestic market segmentation, the SUVs have gone up from about 50% to 52% of the market. Vans are at about 8 to 10%, sedans at about 7 to 8%. Hatches are also slightly degrowing. They have gone down by about 2%. So that trend towards SUVs is continuing.
What clearly stood out in Q1 has been the very strong expansion as far as EBITDA margins are concerned. So both the ASP as well as margins were a positive surprise. Now going forward, car makers like yourself have started giving discounts. So will we expect some demand moderation? After that, also some margin contraction that could come in on the back of these discounts that car makers like yourself are giving?
See, in this Q1, at least as far as margins is concerned, there was no one-off. There was an expansion sequentially from Q4 to Q1 by about 30 basis points, which was, of course, the resultant of several factors, raw material, of operating income, of manufacturing and admin efficiencies, etc., and some negatives also, like operating deleverage because of volume shortfall in advertising costs, etc. So there was a sequential 30 basis points expansion. As of now, we don't see any major challenge going forward. Of course, the uncertainty is always there going forward into Q2 and Q3. And on discounts, it will depend on the market conditions so far. Q1 itself, the discounts were up with respect to last year and last quarter, the previous quarter, which is Q4. The discounts were slightly higher because last quarter, there were some supply bottlenecks, which have now been removed. So on discounts, we'll see as the market goes.
Understood, sir. Give us a sense of the competitive environment too. What kind of market share do you think you can sustain at the end of FY25? And going forward, next couple of years, what is the kind of market share trajectory you envisage?
See, we used to be at 50%. So our long-term goal, let's say by the end of the decade, is to get back to that figure. And if we have the right set of products, the right set of technologies with all the benefits that we have in our service network, we should be getting back there. Of course, it's difficult to predict in the short term. But at least we would like to improve from here on.
So you've guided the street that from calendar year 2025, we will see one new electric vehicle launch till 2031, and also yes, and also a couple of new ICE launches as well. So given the strong launch pipeline, what kind of growth targets are you setting for yourself, at least in the near term, in terms of revenues?
So we have mentioned that by 2030, we'll have about 28 models in all, 2030-31, and about 6 of them will be EVs. And if from now, let's say from next 25 to 31, we have 6 EV launches, so that's practically on an average 1 EV launch every year, practically. So, and other than these EV launches, there will be other technologies also in hybrids, in ethanol, in flex fuel vehicles, in CNG, CBG, etc. All clean technologies we would like to be present in and increase our presence.
So one last question from our end. Do leave us with a comment as far as the tax policy on hybrid vehicles are concerned. What is the latest that you're hearing from policymakers on this? And if you could also quantify the kind of benefits that someone like you could see in case we do see an extension of these kind of developments.
Policymakers look at national objectives. They do not look at specific companies or individual business interests. There are 2 national objectives that are important at the moment. One is oil import reduction, and the second is CO2 reduction. Now, as far as hybrids are concerned, they generate about a 35 to 45% improvement in fuel efficiency. And they generate about a 25 to 30% reduction in CO2 over pure petrol or diesel engines. So that's a huge jump. And the benefit of this is the strong hybrid technology does it without the need of external charging infrastructure. So customer adoption can be really fast. Many policymakers are realizing it across central government and state governments. And we hope whenever they translate it into actual policies, that will have a very positive impact on this particular technology that was slightly at a backseat till now as far as policy was concerned.
All right, that was Maruti speaking about discounts in the first quarter, but no real challenges to the margins. So going forward, it will be important to track the new launches and what the SUV trend does as well. More importantly, from a stock market standpoint, we'll also look at the Hyundai IPO, which happens in the second half of this year, whether there would be any capital allocated towards that as well or not. The stock opened very well after an up move in yesterday's trading session. Now off the highs, still holding up in the green as we await monthly numbers coming in too. Take a short break, come back.